A very good morning to you, and welcome to the TriggerCharts pre-market rundown for Friday, August 19th, 2022. Seeing some red across the markets this morning. Bitcoin getting slammed by 8%, the Dow Jones and the ES. And the Qs all getting hurt, and that is due to, well, whatever reason it's due to right now. And that doesn't really matter, because what we do is we try to chart all this and look for the opportunities, utilizing a sequence of calculations that provide us for where investors are placing their bets. So right now, what we know is that there's a lot of holes back in fills, but where are those levels at? Where's the support? Where's the resistance? That's what we talk about. Hey, I'm Andrew Horowitz, and I am the co-founder of TriggerCharts, and we are going to get through a few things today, and we're going to talk about a variety of items. And let me just do a few things that we always do, because Zoom seems to have changed a few things that what they do. So let me get the chat set up right now. And let's see, everybody can, so somebody can chat me and hit me in the chat room, because that's where I want you to put your symbols here. Everybody can hear me, hopefully. When we talk about things today, of course, we have to start off with our discussion about a disclaimer, because investing involves substantial risk, and past performance is not a guarantee of future results, and a loss of original capital may occur. Please consider this for educational use only, because you need to use your best judgment when you're investing, right? We know that. What we talk about in this discussion on Fridays is a culmination of what's happening, where the opportunities are. We get a flavor for the markets, and we understand better about what's happening, about what side of the market is really the most opportunistic. Now, that goes for the markets themselves, but it also goes for individual names. So when we think about when we are looking at an investment, we could also put in the back of our minds, where is the general direction or the bias when it comes to the markets? 85% of a stock's move in general over time will be related to the move on the markets themselves. Therefore, we have to understand, where is the market going? So where are we? An uptrend, downtrend? Is it below? Is it above resistance, support? Those are the things that we really want to look at. Now, when we consider the things that are going on right now, obviously I like to bring up the weekly themes. Before we do that, because I know a lot of you are very interested, and I'm getting a lot of emails on this. We're right on schedule, by the way. So hold on, don't go anywhere. We have expanded packages. We have a new distribution and installation program that will be happening. It will be on multiple platforms, not only TradeStation, by the way. And we actually have a really good, I think, totality of what we are going to offer. They'll have some different names, a few things. It's going to be a refresh of the entire suite of indicators, but in the end, the indicators will be the same indicators. What you see on the screen to the right, when we're looking at, point this out here. On this side over here, when you see what's happening here with the various lines and the colors and all of that, very much intact. So you're going to have actually more information on your charts moving forward. So stick around, stay on the mailing list. September 1st is our launch, right in that range. It could be September 2nd, but right around that range, we're going to start pushing out slowly and rolling out. So not everybody may get it right away, but the entire packages, so that we are completely up and running by the end of September. And that's the way we want to do it, because we want it to butt up against the TradeStation trading app store. So make sure, do not, under any circumstances, until such time as I tell you, do not get rid of your TradeStation platform indicators, because you won't be able to get those back. There's nothing we could do about that. So make sure to keep those. In fact, I really even want you to keep that for a degree as you install the new packages, so you can just see the differentials and get used to it. It's going to take just a few minutes to get used to, but be aware that it's going to be a really great package. I hope you're all excited. I hope you're all excited about this, because I'm pretty excited about this. This is going to be a great move, and again, an expansion. There'll be more classes and more education. There's a whole grouping of things that we have done as we've teamed to get this distribution up and running in a really neat way, again, with multiple platforms. Okay, so we got all that. We all good with that? Hey, I want everybody to give me a quick thumbs up or a quick yeehaw or something in the chat that you got and understand what I'm talking about with the new packages, with the new distribution program, all of that. Yep, there we go. Come on, I want to see it. Let's go, let's go, let's go. All right, what do we have for the themes? What do we have for the themes? All right, well, reality setting in. I think that we have a bit of, well, let's just say that, maybe we've gone too far. And one of the things that we did see this week, which was pretty fascinating, was that, I don't know if I have an actual chart on this. Let's see. Do I have a chart? I don't know if I have a chart here. No, definitely not that one. This one? No, this one I have. So SPY, for example, bottom right, take a look at this. The bottom right here. So we have the studies. I'm going to take off every study. This one. Okay. Besides, see this one right here? We're going to change this to a 200-day moving average. I want to show you something really interesting. Look at that. I mean, we kissed that 200-day moving average right there. You see that? And that day, that was Tuesday, we not only came down, but it was a sharp reversal right down off that 200-day moving average. I mean, you can't get much closer, right? Let's get the exact numbers. The average was 431.57. The high was 431.73. So 20 cents differential that we pop right by, and everybody said, oh, no. That resistance that was support at one time or another has once again become resistance, and now we're rolling down. And that is a 200-day moving average that is sloping down. You can see that. That's important to understand, because when we look at these various indicators like an average, and where is the direction going? It's clearly sloping down, right? I mean, it's definitely going down. So when we got to this level right here, and we realized that we were in a declining overall downtrend, which we know, right? We can see that the downtrend right here. We did break above it for a little bit if you want to draw a simple trend line, But the fact of the matter is momentum was there, everything was good. And what happened when we saw that is that the reality set in, technical levels kicked in, and everybody said, oh no, look. And at the same time, if you remember anything that I've been talking about, that one of the things we want to watch, keep in the corner of our eye, somewhere on the desktop in the corner, that you could just refer to when you need to, which is on a regular basis. You look at where are the rates on the 10-year. 10-year is what I like to use. Where are we? Well, rates seemingly have gone in August from a 2.5 up to a 2.9, currently sitting at 2.94 right now, up again a little bit today on the reality or on the expectation that the Fed is going to raise rates. How much in September? Well, there's a lot of talk about 50 basis points. I think that's the overwhelming bet right now, about 75% or so in that camp. But we are seeing a lot of talk once again about a 0.75 or 0.75% move. And that is going to be something that will spook markets, because everybody is getting nice and cozy and comfy to the idea that we are going to see peak inflation. And now all of a sudden we're going to see the turn, the drop, the move from where we were, and this expectation of never-ending rate hikes into the next genre of where the Fed would be, and their rate policy being one that they are going to slow down the overall increases in rates, and then eventually have to, because they pushed us into a recession, reduce rates in 2023, probably in the, end of the first half or so. Well, I don't know, because now we're seeing like Kashkari and Bullard, and we're seeing that all of the Fed speakers are coming out and saying, not so fast, Mr. Market. Investors are getting it wrong. They said that. Investors are getting it wrong. So that is starting to get people a little bit nervous. Now, what else is happening in the markets that gives us some expectation that, well, reality may be sitting in and we're starting to get to the peak of something? And usually the peak of something is where we reach peak FOMO, where we reach peak just speculation. We saw the meme trades moving, like a major move, and we saw the boom and bust. And we can talk about what's going on today, which is oftentimes end of cycle activity. Now, that could be a flush to the bottom or a flush over the top. One of the things we're seeing is low quality stocks are moving. We're seeing short gamma squeezes that are happening. We saw that with Best Buy this week. And why not just saunter over to Best Buy and let's see what's happening there today. Best Buy down 35% right now after this incredible move from about $4.80. We saw that. We called that. We actually took the move from $4.80. Let's talk about $5.80. $5.80. You were out somewhere right about here at $10.50. Nice little close to double right there. Moved in again right here at about $12.75, right about here, $12.75, and took you out yesterday at about, let's see what the number exactly is, $19.06. That was yesterday. That was on a daily chart. You could have done this a lot differently looking at a 60-minute and seeing some significant profits there as well. Move in somewhere here. Look at this. Move in about 14. You'd have been out about 18, but you had some great opportunity. Maybe if you thought this thing was going a little berserky to get out. Why? Well, we're seeing that Ryan Cohen, who is the chairman of the board of GameStop, he is the creator of Chewy, and he is an advocate, was an advocate of Bed Bath and Beyond. Now, all of a sudden, you have a situation where he does a major option in the future, about $60 and $80 options on the call side. Everybody got excited that maybe he was going to push the name up dramatically because he has 9 million shares to begin with. They let the stock squeeze, and then last night or yesterday they talk about how they're unloading all 100% of their shares, and they completed that yesterday. Investors like, wait a minute, I invested in this for what reason? Anyway, I don't want to belabor the point. Bottom line is, be careful who you follow. These guys that are the market whisperers like Chamath Palihapitiya, even Mark Cuban to a degree, all these pumping, even Elon Musk when he talks about Manchester United recently. I mean, just be really careful what information you're really tacking your money to. I think that's important. The other thing that's making moves is, of course, every breath of the Fed, like a song from the 70s there or 80s. Every breath that the Fed takes moves markets. At the same time, though, there's also something happening around the world. I think we have to recognize that there is a slowdown that is happening. Morgan Stanley downgraded, JP Morgan downgraded the global levels. China remains in lockdown. The war is continuing on. Energy prices are going up. Consumer confidence in Europe is down. UK inflation, the highest ever. Our inflation tick off the highest we've seen in 40 years. But again, the parade is continuing out. Bulls at 75 basis points as of yesterday. And everybody's marching the same drummer that inflation needs to be stopped. This is what really started moving markets. They're data dependent. But then again, you have to ask what time frame. This is something that I think is really funny. Talked about this with Peter Schiff. If you know him, he's a gold and precious metal guy, a hater of crypto, a lover of other currencies, ex-dollar, thinking the U.S. is probably the worst economic situation ever. You'll have to listen to that on the Disciplined Investor podcast. That'll be launching this Sunday. Make sure you subscribe to that. If you are a podcast listener, you have to listen to the Disciplined Investor podcast. We have some great guests coming up. I think Ross Gerber's coming up. Tom Thornton's coming up in the next couple of weeks. And this week, again, we have coming up on Sunday, it will be released is Peter Schiff. The timeline that we saw on Best Buy is something I threw down here because I want you to really look at that, maybe even write this down. We had this gamma squeeze that was based on an option purchase that was done by Ryan Cohen, who people follow. That deal was actually done some time ago, from what I understand, but yet it was reported on Reddit boards just a few days ago. Everybody got their Twitters in a twist, got excited. The short squeeze was on a low float stock. Reddit boards went crazy. You know, the stock after Ryan Cohen said he was going to sell all of it went from 28 to 19. And then now it's trading at whatever, 11 today or 10 and a half, whatever it is, on the recognition that, yes, the final sale was made yesterday. So a lot of things happening there that you need to be concerned about. This is an area that if you are thinking about investing in, which that's the name of the game, isn't it? The idea of speculation, the idea of, where we are in terms of, the overall market, or to what happens with regard to, a stock is really just all about the charting we're looking at. That's fine. Doesn't matter the name, doesn't matter what's happening, but be aware that pigs get slaughtered in those kind of environments because you can get caught up in it pretty easily. Metals, big question. What's with gold and silver? I mean, have you looked at gold and silver lately? Let's take a look at silver for a second. I'm just using the charts. I think is a better way to kind of bigger way, I should say, not better. Bigger way to look at what's happening right now. And we can turn on and off a few things. We'll turn on our market profile, for example, right there. So this silver on a 60-minute, I mean, right now trading down at 1777. So right about here, fill this gap right here when we look to the left. right? This area had this big rise over the last few days from 17 to 19, and now it's coming back. I mean, just this is just not playing it. It took back the entire move from all, this up move down. There's a really nice up move. And the dollar has been weakening throughout this time. This run that we saw right here was, done in, I would say, a fast manner, right? It's got this spike off the bottom. But look at this downtrend that we've been in silver. Look at gold for a second. We can do this in the futures here. You want to do the futures? GC, for example, let's do this differently. Let's do gold futures instead. And look to the right chart here. We got momentum that picked up dramatically and then starting to wane again because the dollar is coming up as a safe haven. And that is interestingly causing some dilemma for the rest of the markets as well, which the dollar up has been actually pretty beneficial in the recent run up. But generally speaking, a dollar up does also mean that there is a flight to safety. Used to be the yen, but everybody realizes that the yen is just getting obliterated by the Bank of Japan. Kuroda just has a desire just to take that currency down to the depths of hell, to be honest with you. And why would anybody who is trying to run for a flight to safety think about buying yens at this point when there is no central bank desire to raise interest rates and they think that there's no inflation there? And whereas on the other hand, you say, wait, where is there inflation around the world? And where's there a central bank that is actually doing something about it that will actually raise the value of their currency? Well, land on that square, and that square is the United States. So that's what's happening right now with regard to the currency situation. That's not helping gold. The run is just not helping gold. Yeah, here's your Dixie. Here's your dollar. Dollar sign DXY is a symbol there, by the way. Look at this run. I mean, look at this run from 105 to 107. I mean, dollars currency shouldn't be moving like this. And let's look at where we are. Let's this for a moment. Look this here. I'm going to show you a little trick. Okay, let's look at a trick. I'm going to take. So I'm in here. Follow me here, TradeStation users. If you've never did this before, you probably did, but I'm just going to show it to you anyway. So what we want to do is we want to find our trend line tool, right? So it's this little box. If you can see this here, it's a little box with a lines, and you hover over, it says trend line. Let's grab that, give or take. Let's hit it right there. Okay, and let's drag it to right there. See that? I got a trend line. What does that trend line mean? I just connected the low from approximately 2022, or the point of 2022, to where we are today. Now I'm going to double click this. And what I want to do is what kind of calculation? Okay, fixed point, we know that. You can do a variety of things. But what I want to do is I want to do some labeling. I want to say, okay, show me the percent price change, and what the hell, show me the bar count. And it's going to be aligned left because I didn't align right. It's going to be down here. Okay. And you want it to be, let's call it 11 bold so we can see it. All right. And we can't see it. 12%. See that right there? 12% over 162 bars. So where's where we are, about a half a year or so. 162 bars is not, don't forget, there's not 365 trading days in the year. It's only about 250 or so. We have weekends. That's the point is, right? Part A. Hey, so you got 12% move on this. And then you could take this. Has anybody seen this before? You take this and drag it wherever you want. I don't know, drag it over, right here to the top, right? Yeah. Right. Okay, there we go. 16%, 365. So it's about, over the last, since April, year and a half, we're up 16% on the US dollar. That is very significant because that is going to be a problem for multinationals. And that's why we're starting to see this big problem with markets. The difficulty of making money is a problem for many multinationals in that environment. And of course, it hurts emerging markets, et cetera. Now, since July, right, look what happened. We peaked out there somewhere over here, and then markets started coming up really hard and ramping. Look what happened to the dollar. Dollar was a lot better off. And then all of a sudden, we started to see some wiggling around. This is the 12th. This is last week. Started seeing wiggling around. The dollar is starting to move up again. It's up 40 basis points yesterday to 107.93. And moving higher today as well. So this is a big issue when it comes to what's happening with the markets. Let's not even finish this now. And that's also more importantly what's happening with silver and gold. That's a big issue. Silver and gold having big problems due to that, right? This whole issue right here of the dollar, of higher rates, all of that is aligned very closely or correlated, as we say in the investment world. Now, what is happening? Retail sales this week, I would say flat, nothing bad, nothing good, really. The only thing is you can say, well, prices are a lot higher. Okay, that means people are buying less, but they're spending about the same amount. That is true. I'm not sure what that means exactly, but that is true. Could mean that maybe profitability and margins are being squeezed also, less product, therefore big problems for retailers, which we are seeing, of course. Housing continues to be weak. No question about that. Weak on housing. The leading indicators falling. FOMC minutes came out this week on Wednesday, and I think they're confusing. Nobody really understands what they did and what they want to do, and I think that is the point. That's the whole point. I think that the idea about confusing or at least not being pinned down was really important for the Fed. Next week, we got durable goods. We got GDP, the second revision of that, not important. Personal income spending. This one is the one right here. Next Friday, be aware. Next Friday. Making some circles here because I think it's really important, right? Very, very important. Very important with this. And what we are is looking at PCE prices. PCE prices are the Fed's preferred measure of inflation. So important. Stands for personal consumption expenditures. All right, let's look at some stocks. I got a bunch of names here for you. Let's take a look at Home Depot first. Home Depot did break out a couple of days ago on better than expected numbers, and that was nice. We saw this basing out, and this. I guess you could look at this. Oops, that is not what we want to do there. Let's do that again. Let's do this. This, right? You've seen this before. This kind of move. We saw that it gets tighter and tighter, right? You got a bit of a cup and a handle here. If you want to think about what you're taught by Investors Business Daily, clearly cup and handle there. And that's interesting design. Where do we go from here? Pretty much stop dead on this line. Again, always looking to connect lines. And let's see if we can connect it. Oh, sorry. Oh, we're going back. What do we do? This daily, yeah. So we're going back to March already. We'll probably go back a little bit further than that, but there we go. Yeah, so look at that all the way back to October. There's a lot of good support / resistance across that. It's probably stopping. You get above 328. You have this opportunity to get right to there, 339. Is it going to happen? I'd be hard pressed in this environment right now to believe that's the case. We looked at BBBY Wolf. That was they reported last night or the day before, excuse me, came out with some really good numbers. Technology company, Wolf Speed is their name. Really no way to catch this. Same rounding, drop off, fill the gap, but there was just no way to really signal this on a long term, maybe short term if you were able to find it, but I would be hard pressed to believe that a lot of people could find it. Here's just a good stock I want to show you. This is on ON or on semiconductor. Again, another V move. Obviously, we saw that from July. I showed you this was pretty much rated and was not rated, was related to the dollar, right? The dollar being down and peaking down at this level, and then started picking up again, and or reverse. I'm sorry, the dollar peaking at the upside to the end of July, and then reversing down and giving up opportunity. And this changing a little bit here, but earnings came out on these guys really good, all-time high. Just a great stock overall. Big consolidation. This is something also I looked at here. This big consolidation range, right about there. Couldn't really get above it, not much below it. Once you did break convincingly, though, it seems to be broken above. ON Semiconductor now down about 2% in the pre-market right now. Futures coming back ever so slightly, as they do, because everybody's all excited. I've been talking about this stock forever. This idea of SIGA, they just got approved for 50,000. I think it's called TVOX. They have a monkeypox injection for people that already have it, and possibly also for people that to a vaccine. But they're not the main players in this, but they're getting a lot of secondary looks. We target this at 10 when I talked about it. Right now we're nowhereville. I would look at this back down to 20 and definitely in the 19 range. I would say, put that on your radar for that. RCL. I thought this was really interesting last week. We came out with RCL came out with a secondary offering, but it didn't really matter. This is all about gas and oil prices. By the way, where is crude right now? Let's take a look at that. Yeah, this is a big box we drew some time ago. We're going to draw this right across some more. Support down about 87 or so, moving down a little bit to the 89 range or so. Fact of the matter is that we're seeing that this is this big rounding, this big mountain, taking back that huge move from 120 where it has double top. There really is not much going on here, but if we did connect all these lines, about 87 on the top end, probably, I think we connected a few here. Yeah, right there, about 92 on the upside. That was support, if you recall. I said, listen, we break below that, we got a problem. And we sure did. We went from 92 down to about 85 in a matter of just a few days. So really interesting there. RCL was following along, I think, with the fact that oil prices are a little bit lower. That's what's going on there. KSS down a little bit. There's nothing good here. Just gappy, wide open, big, always what I talk about. How many times have I talked about this? The idea of what do we want to do? We want to always look left, right? We always want to look left, look left, look left. Well, there's holes. Look at all these holes, these areas that don't have any of our markings, right? And if we actually put some other studies on here, radar, you can see that, I mean, this is just, there's nothing here. These big gappy areas, these holes, if you will. There's just, here's a bit of a normal distribution to a degree. This particular market profile, as we call it, has a normal distribution. This one is a P. This one's a B, a little B. This one could be a big B, I guess we can call that. Not really. No, take that back. This is a P, definite P with a little, I don't know what on the bottom there. But this is a normal distribution, a capital D, big fatty. That's a normal distribution. And when we look at this, we are seeing that there's probably some support right there at about the 28.5 range on that. This got kerplunked. Interesting here, though. Look, let me take this off because I think it's overriding this. Right here is our level. You've had about 5 days at this level now. What is their significance there? I don't know. Let's see if we can find it. I mean, if you did look at this chart long term, and you would have seen that, hey, you get below a certain area, definitely below 19, there's a big gap. It did fill that gap. There's nothing. Again, when we look at the finding an area, there was nothing here really. This was just a blank area. It's a hole. You want to call it a gap. I don't care what you call it, but this is what happened. There was no volume. That's why because there's no volume here. That there was gappiness. Once you have gappiness, there's no volume, and that area becomes an area of concern. And what happened was with this area, you fell right into it. Sinkhole. Think of it as like a sinkhole. There's nothing below here. There's a good area right here, good area. And then when you drop, boom, go straight down. What happened here is this hole. And when you saw these earnings come out and this earnings revision, but there's a stock that was 40, 40 or 50 for that matter, right? Ran up from 15 to 50. Did a double top right here. No support to speak of. This whole area is really just kind of empty-ish. Got a lot of movement there. That was a good area that was filled. And then you just got nothingness going on right here. All right, what else we got? Well, WBA, a couple of things here. Had a really rough day yesterday. Look at the 60-minute here. Very rough day yesterday. Where do we come down to? Pretty much down to some support. I mean, probably has some further downside to work out here. But this is amazing move from 54 down to 37. Big move on the markets recently. 37 went up to 42. Starting to see a lot of stocks roll back over right now. Be aware of that. BJ's came out with earnings. Actually, good number. This is a wholesale. People looking for opportunities. All-time high on recent high. I don't know if it's all-time high. Let's see. Time frame. Let's go weekly. Yeah, all-time high on BJ's wholesale. Look at that. Wow. That's pretty amazing, actually. Looks like an all-time high. From 19 at least. Pretty good. So they're catching up. People are looking for opportunities to buy things at a lower cost, right? Foot Locker out today, up 22%. Right now, again, aren't you seeing this? It's plain as day right now. It's plain as day. What do we got? We got nothing, right? We look left. There is nothing here. So above this level of 32, where it stopped yesterday, where's it trading now? 39. Trading at 39. Why at 39? Well, it seems to me that when we look at this, it's starting to creep up on where that next level was. So this whole gap, it's moving up from last time it came out with earnings, this whole area right here. And now it's going to start moving up into the next area. And you have the opportunity up to 41 and change. And then you get some real consolidation at 40, 44, 42, 43. Hey, we'll be here next week. Thank you so much for joining me. We'll have this on our YouTube channel. Make sure to stay tuned, stay involved, watch your emails. Lots of great stuff coming. I'll see you again next week.